17% of the building's leased. So interesting that it only got $2.50 on a rent per square foot basis, seeing that it's really just a 5-minute walk from Bloor Yorkville, and this other new project that just registered as well is getting $3 per square foot. So as you know, investing in real estate is location, location, location. So pretty interesting. Liberty Village, which is a kind of an up-and-coming area, actually getting higher rents per square foot than X the condominium. So, and X was viewed as one of the best new architectural buildings when they had these recent PUG awards. So it's quite interesting when it comes to investing, what you should and shouldn't be looking for. And don't ask me, because some of these numbers are definitely off from what I would have predicted. So what's coming in for the future here? We have almost 16,000 units will register in 2011. What does that mean? Obviously, it means additional rental supply. So in coming to the Toronto market, we've averaged just about 12,000. So obviously, 16,000 will be a big jump in terms of unit registrations. We had in the second quarter, we just finished computing those numbers, 8,000 units registered just in the second quarter. So we're already over 10,000 units in the first half of the year. So I may be a little light on my 16,000. So obviously we're going to have a lot of additional supply. Additional supply keeps pricing low, obviously. So here's just kind of an executive summary of what's happening in the condo rental market right now. Even though some of the things I said would come off as negative, but rental transactions are high. We're tracking stuff through the Toronto Real Estate Board. So obviously there's a lot of stuff happening on Kijiji and some of these other sites, but we're just looking at the transactions through the Toronto Real Estate Board. So 2,644 in the first quarter, which is strong. Lease to listings ratio, so 58%. So the units that are being put onto MLS are getting leased. That's a strong number. Anything over 40 is probably a good place to be. Average days on market, 29. So you list your unit. It's taking you less than a month to get it leased up and getting someone moved in there. And the percent of list, 98.5%. So we're not seeing people coming in and negotiating down the price. The negatives, like I said, index price growth for new condominiums are not keeping pace with what's going on in the rental market. Rental index pricing, no higher for projects registered in the past 12 months than ones that did 4 years earlier. So obviously that's a problem. An additional rental supply expected. I don't have much time, so I'll try to fly through some of these other charts. I know some people would probably be more interested in these ones than the earlier ones, but we're now at this red line shows 284 active projects in the Toronto CMA. After this quarter, we were expecting about 38 new project openings. Obviously, registered ones fall off our list, but we're going to have over 300 active projects. The average project now is 260 units, so significantly larger than it was 5 years ago. Almost 75,000 units in the market right now. Another thing that's bullish for the new condominium market, 7,550 construction starts in the first quarter, which is, you can see from this giant bar here, certainly the highest that we've seen over the past 4 years since Urbanation started tracking the stat. And we're now at a record number of units under construction. We have almost 38,000 units under construction. Obviously, anyone that drives down the Gardner can see the number of cranes that are going on right now. I forecasted 16,000 new condominium sales at the start of the year, and I upped that to 18, and I may have to up it again. Very surprising. Typically, when there's been a spike year in sales, the next year drops off a little bit. So that's certainly what I was expecting. But 5,000 sales in the first quarter, and we may have as many as 8,000 new condominium sales in the second quarter. So we'll already be at 13,000 by the first half of the year. So I may have to update that. But again, very positives in the new condominium market. But where's the sustainable level? So we look at starts, completions, sales, new openings. Some are leading indicators, some are lagging indicators. So I'm saying it's 15 to 17,000. That's kind of based off of our capacity to build these units. You know, as you saw from that registered chart, we haven't registered more than 13,500 in any 1 year. Yet the previous chart we showed, we're selling about 17,700 on average over the past 5 years. So there's a little bit of disconnect there. So if you are buying a pre-construction condo, you may be waiting longer for it to be delivered, which may not necessarily be a bad thing. Unsold inventory in the market. People are always concerned with what's unsold in the market. We're about 12,000 unsold units. That's only 17% of that 75,000 total units that I showed earlier. So that's a record low. Previous was Q1 of 2010, same thing, and Q1 of 1986. So right before the crash, amazingly enough. But it's certainly not as bad as where it was in Q4 of 08 in our mini recession. We had 17,000 unsold units here, almost 30% of the market. So we've really come down. We've crept up a little bit here, but no real concern. So supply is under a year's supply, so we're definitely in good shape here. Rent, price per square foot. So we track three numbers here. So the orange bar is the unsold price per square foot, or the asking price of all units in the market, $543 a square foot. Resale, $382. And this sold number is kind of a blended number of the units that have sold in the market here. So this is the largest gap that we've seen here in a while, ever since our kind of mini recession that I mentioned earlier. What's causing this? What the result kind of this is investors are purchasing solely in the new condominium market, and end users are buying in the resale market. The investors are willing to put down that down payment and wait potentially up to 5 years for that unit to occupy or register. So they're the ones taking the risk. So it's interesting. You know, we've said many times, been quoted in the paper, we think it's 45 to 60% of the new condominium market in the Toronto CMA is investor owned, but certainly in downtown it's 80, 90% in some of these buildings. So quite interesting results. Just a couple more charts here. Resales, we're thinking about 17,000. Obviously, the resale market continues to go up and up, so we're expecting that to go up a bit as well. Listings in the market are very healthy. Last year in Q1 2010, everyone was expecting prices to go up. There's a little bit of confusion about HST, so a lot of people listed their units, but we're down more to a sustainable level now. So, exec sum, sales near record levels in new in the resale market. Everything seems to be fairly rosy. Very strong construction starts. The lenders out there are putting their money out, so they're obviously bullish on the market. Unsold inventory near record lows. The negatives, major infusion of supply. We had 38 new project openings in the second quarter, which was almost 9,000 units. So it's by far the largest number of new units that have been added in any single quarter. Another negative, resale pricing only up 3.5%. Certainly we'd like to see it a little bit higher. And again, the record number of registrations in the market, new units coming on, will be competing against these other new units in the market right now, because these resale units are brand new. They have all the same level of finishes as some of these new. So that's about all I have for you today. Make sure you follow Urbanation on Twitter. I know that a lot of you guys are out there doing the Twitter thing, so we like to keep up to date on new project openings. I know there's a lot of real estate agents out there, so they want to keep up on when the new projects are coming out. So follow us on there, and thank you for having me.
Urbanation. Thanks a lot, Ben. So, of course, we talk about investing, not speculating. This gives us a lot of perspective of what's going on in the downtown market. We've said many, many times before, of course, there's a lot of inventory coming into the marketplace. There was 38,000 units, I think, as Ben said. Is there the appreciation there? You can get cash flow on anything if you put enough money down. So do your diligence. Part of this presentation was to give us some insights into what's really going on, and to use our diligence in our decision-making process. What is our exit strategies? How does something like that work? And I'm often talking to investors who are saying, well, we'll buy this unit today. It's not going to be built for 3 years, and we'll cash out in 3 years, and I'm okay to tie up my money for that length of time. Of course, so many people have that plan. As Ben said, as many as 90% of a building can be investor related. So, everybody's going to have that plan. And it's going to take one person to drop his gear, and then everything is affected by his decision or her decision. So just be very, very aware of that.